It's very possible that I will have to do some trades.
Welcome to the Flow Show. Sean's going to be live trading. Show us your P&L today.
Oh, I'm too modest for that. What is happening, everybody? It's your boys, Sean McLaughlin, Steve Straza, coming to you live, 20 minutes to go in the trading day. This is our own version of fast market. Straza, you ready?
Dude, I'm so ready. You're going to do some live trading. You're going to show us all your P&L for the day. You're killing it. I'm so excited.
Well, you're maybe about 10% right on that. There's very real possibility that I will make some trades while we're talking here. It's just, it's a fast market. I got positions on that need managing risk. But hopefully the market just kind of chills out for a little bit while we're talking. This is the Flow Show. This is what we do here is we like to dig into unusual options activity that we've been observing and see if it can lead us down a rabbit hole into some trades. So Straza, why don't you tell us what you're looking at today?
So things were coming undone at the end of last week, right? So let's zoom out. Let's take a step back, put this all into context of the environment that we're in right now. We had some bank runs last week. We had 3 bank failures in the past week and a day or two. Yet when you look at the unusual options activity from last week, it's all bullish flow. I wouldn't think too much about this. I did see some plenty of bearish flow in financials. We left it all off of our list. It was mostly bullish options activity in techie stuff, right? And that was a great bet to make late last week. It could have been a bloodbath coming in on Monday, right? I think the government did what they needed to do. But what you saw this week was really rotation, right? Stuff that tends to do well when rates are rising, that has been doing well. Energy, financials, commodity stocks, they've all come way back down to earth since last week. Meanwhile, growth, tech, and even Bitcoin, making new 9-month highs, has more than picked up the slack. So I think we're seeing some very healthy rotation. We had a lot of techie stuff, whether it's Uber, Wayfair, SunPower, Stratasys, Roku on our list last week. So, I don't think it's all bad. What are you making of this action?
Well, if you would have asked me this morning, and you kind of did ask me this morning, or you weren't on the spaces, but we talked about it on the spaces with the chart report. Today, earlier this morning, was feeling like a completely different environment than the previous 2 or 3 trading days. It felt like something's changed. The market's taking a breath. Cooler heads are prevailing. That was kind of the feeling. I feel like maybe that's changing a little bit as the market has gone on this afternoon. We're off the lows, so that's good. But the hope is, I think the hope for everyone is that what we're seeing in Silicon Valley is kind of an isolated thing. It's going to be kind of contained in that area. It's going to be bad for the people involved in that for sure, but it's not something that's going to spill over into the broader economy. And that's the hope.
Yeah. So you're not saying isolated Silicon Valley. I think we've already found out this is not isolated to Silicon Valley, but we're at least for now containing it within the banking or financial sector, right? We're not seeing a knock-on effect to technology or biotech, which a lot of us thought could have happened. And it looked like was most likely going to happen last week before the government came in and backstopped all of this.
Yeah, it was definitely a nervous weekend for sure. But I could tell you, Straza, that as an options trader, me being the options trader here, I still feel like this is an environment where we want to be selling premium, but we want to be careful selling premium. We want to pick our spots. We want to use defined risk. I mean, I'm the first person to tell you that I got burned on undefined risk the last few days. I was short strangles in KRE, the banking index, and TLT, the bonds. And those hurt me this last week. I mean, they hurt me as you might expect to be hurt. I mean, they were small positions in perspective to my whole portfolio, but still the size of those losses was much larger than, the wins I usually expect to make in those types of trades. And so that happens.
Let's dive in real quick. Your short strangles, volatility blew up the past few days. So the premium on all those, it's flying higher.
Yeah, I mean, look, I got an email and a blog that's going to be going being published in about 20 minutes, so everyone could read all about it. I talk about the KRE trade in particular, but I'll just give you the high level. I mean, KRE in what, 3 trading days lost something like 26% at its lows. I mean, that's an unheard of move in any ETF, particularly a banking one. And when things like that happens, they don't happen very often, but they do happen, and you have to expect that to happen from time to time when you're doing strategies like selling naked straddles. You could do 100 of them and have good results, and then boom, you have that one trade that gives back a chunk of profit. That's part of the game, and the only way that you survive that game over the long run is by trading these types of trades small. That's the only way, and we did that, and so we're fine. That's the lesson, of course, right? Just reinforced, but it's part of the game, and this is that time right now, unfortunately.
I think the fact that you didn't blow up based on this price action means that you must have position sized well.
Well, I mean, look, I'll give you hard numbers here. KRE at one point was down 26%. I believe that was the low. The impact to our portfolio, I mean, we had other positions that were going against us as well, including TLT, but all in, our entire portfolio was at its worst off 6% from our highs, which sucks. That's, nobody wants to lose 6%, but compared to what it could have been way worse if we were position size larger.
Well, to put that into perspective, the last 5 days, trailing 5 days price action has been as bad as any time during the financial crisis.
Right.
So this is a historic move for markets. And you were in the financials themselves, which are the ones that moved. So what I'm hearing is this could have been a whole lot worse.
Oh, sure. If I was more aggressive in position sizing and trying to trade, put on bigger positions, it could have been a very, very bad situation. But and I get comments a lot from people like, "Oh, why are you trading these so small?" This is exactly why I'm trading small. Right here today, what's happening today is exactly why I trade these so small.
All right, so you want to get into it? I got a good one for you today.
Let's hear it. Give me some good money making ideas.
We love buying where Uncle Warren Buffett is buying. We've done this before on here, so I'm sorry if you've heard this before. But look, we're excited. Just a few weeks ago, I was talking to the analyst team and I was saying, I think Warren Buffett might be done. Here's the chart that I'm referring to when I say he might be done. Time and time again, last year, we saw Warren Buffett and Berkshire Hathaway come and put a floor in Occidental Petroleum stock. What do I mean by this? Look, this is September. We drop below 60. They're out there buying for those 3 days until price is back above 60. You go back to the summer, time and time again, whenever we fell below 60, we've circled the Form 4 filings and the exact dates that Berkshire was buying in yellow on this chart. So last few weeks, we're all sitting here internally saying, where's Uncle Warren? Is Berkshire going to come out and start buying again? There's a little bit of a change in character this time around where he wasn't buying right away. We broke 60 and I saw nothing. No Form 4s for over a week. Finally, late last week, we got the Form 4, came out, bought a good chunk of stock again at 60, bought it on strength this time, back above 60. So it looks like he's still here. He's still putting a floor in the stock. He got FERC approval last year to buy up to 50% of outstanding shares in Occidental. He only still owns about 30%. So I think there's a lot more buying that Uncle Warren could be doing. And if you look at where we have our risk defined in this trade, about 57.50, we're buying exactly where he is. So I really like Oxy here. I think it's a great trade.
This is all great because I was recently in an Oxy trade for the very reason because I knew that we had Warren Buffett in our back. And then to those conversations you were alluding to where you guys were saying, Uncle Warren hasn't been buying lately. And I was like, what does that mean for my position? I was short some puts here. I was short the 60 puts. Mm-hmm. And but luckily I got taken out at my profit target last week. So all is well and good. But now I think I know why, because you're saying he went back in and bought some more stock as he always does. And Thank you again, Uncle Warren.
I mean, look, we've detailed it out here. If you go back to last March, outside of his initial purchases, right? Because when he first started buying, you can see on the chart here on the left-hand side, price went crazy, right? And basically, hit the level or at least the range that we've been in now for the past 12 months. But if you just go down, since he started buying, look at his average price: 57.11, 57.30, 55, 55, 58, 58, 58, 57 and three quarters, 59.60ish. Like, this is where he buys. So if you're looking for, exposure to energy, I can't think of many better vehicles than OXY at 60 or the high 50s, because you're literally buying where you have an institution, probably the best institution that you could buy alongside of, accumulating shares at the same level. Our target back at those 2018 highs, call it $88. That's considerable upside from here.
Well, look, Straza, I like it. I have continued to like it for a while. I mean, we've done a number of trades in Oxy, a number of options trades that have worked out.
Well, you're flat now. Let's do another.
Yeah, we're flat. And now you got me thinking. I mean, look, the market has had, some scary, excuse my language, some scary shit thrown at it this past week. And if Oxy holds this level and the implied volatility that you can see on my chart, and this implied volatility hangs down here, maybe it's time we stop nickel and diamond this thing by selling puts and get aggressive and play for a breakout and buy some calls.
Yep. And at the sector level too, it's important to point out energy stocks. If you look at XLE, hit its lowest level since October yesterday. Look at Oxy holding this range just fine. That's relative strength. This is still your leader.
Well, let's take a look at the options chain here a little bit. With volatility low, long calls, longer durations start looking a lot more attractive. And, maybe we look into, say, January. I like to buy 25 delta calls. We've talked about this in the past. Maybe we'll scooch up a little bit. The 80 strike here. 80 feels kind of far away, especially, you could buy them for about 310. I don't know. What do you think about that 80 strike? Is that, I guess it's not terrible. It got as high as 77.
If we're going to hit our price target, we're going to 88, because if this is a failed top, we're going to more than take out those highs in the high 70s from last year. So I think an 80 strike more than works.
Okay. An 80 strike, you get it for, about $3, 310. And that's not a crazy price. And
you have almost a year.
And it keeps you positioned until January. That's I think that's where, if I want to put this trade on, maybe I'll look at this tomorrow. We have 10 minutes left in the market. I'm not going to do it today, but I'll put this on my radar tomorrow, Straza. I like this. It's been good to us. JC hates it when I talk about superstitions, and I get a little superstitious about going back to the well on trades that continue to work for me. But when we could do it in a defined risk way, we know what our risk is up front, can't lose any more. And we know that Uncle Warren's got our back, and it's holding up well in a pretty ugly tape right now. It's a lot to like.
Speaking of the tape, mind if I just totally change course here? We've been selling off steadily all day. I think you alluded to it earlier, right?
Yeah, here I'll pull up an intraday chart on SPY. Pretty much from lunchtime. These hours here are mountain time. So 10 o'clock for me corresponds to noon Eastern. So here's noon Eastern. And yeah, basically lunchtime, we kind of gave up the ghost.
Look at KBE though. Let's look at the culprits of this whole volatility mess since last week.
Ooh.
Banks came out. They opened like 8% higher today. They have sold off steadily all day long. I think the close is really important here. You want to see him turn it around and at least not turn negative on the day, right? This morning I was looking at these bank charts. I was thinking, oh, wow, great. Maybe this thing's over. But then they just got pummeled all day long. So I think the next 5 or 6 minutes are really worth paying attention to here.
Yeah, this is not very inspiring trading action in the banks, and that is the problem sector. If you're rooting for the market to cool off, you want to see these financials firm up, and this is not very encouraging trading action heading into the close. You're right.
These guys got to stop the bleeding before we can give an all clear signal for the broader market. Banks have to find a floor, and the way they've traded intraday today, that's a big down open and a big red candle tomorrow, based on my experience.
Well, I'm glad you brought that up, Straza, because going into tomorrow, we just talked about the Oxy trade, and I like that trade long term.
Yeah.
But I like it on the condition that the market is stabilizing. So if these banks are continuing to slip tomorrow, maybe I hold off on that OXY trade a little bit and look for more premium selling opportunities, because it's still a pretty good premium rich environment to be selling premium in if you do it in a defined risk way.
More than prudent way to play it. I think we have to be very careful. Banks need to literally find a floor, stop the bleeding, before I'm comfortable putting on more long exposure in any area. I will say, to play devil's advocate, tech stocks, growth stocks, cryptos, whatever, I think they, really kind of picked up the slack for the broader market. I think it's their resilience the past few days, super bullish development, but the banks really need to stop falling. The regional banks, this has to stop.
There you go. We got some ideas to play if, on the condition, the market cools off. That's maybe the message of our show today. We like OXY long term if the market can contain itself.
I'm with you, man. Let me know what you do. I'll join you.
I got trades to do, man. Market's about to close, so let's pull the plug on it. Thanks for tuning in, everybody. This has been the Flow Show. I'm Sean McLaughlin. That's Steve Straza. Thanks for tuning in. We'll catch you again next week.
Later.